Hey everyone, welcome to another market update video. Hope your February is going well. These videos are meant to be really short and palatable for you guys, which means that you might want to know more information sometimes. And if that's the case, that's totally fine. Always feel free to reach out and I'm happy to elaborate on anything that we discuss in this video. By the way, we're in San Diego right now and we went to the San Diego Zoo. And if you stay till the end of the video, I'm going to show you the cutest animal you've ever seen in your life. Stay tuned. And with that, the housing market continues to be very intriguing in February, and we all seem to be very interested in the same things right now: mortgage interest rates, home prices, and how many homes are for sale. Let's start with mortgage rates. If you haven't heard yet, February was pretty rough on mortgage rates. Inflation and mortgages are enemies, and the battle continued in February as the January jobs report and the CPI numbers came out higher and hotter than anticipated, and it scared the mortgage bond markets. This means that mortgage rates at the end of January, which were around 6 to maybe 6.25%, are now at 6.75, maybe 6.85 for a 30-year mortgage. But Colin, in your last video, did you not say that mortgage rates were going to decrease? I did say that in my last video, and in fact, I still think that they're going to decrease. What happens with mortgage rates is they're gonna go up, they're gonna go down, it's never linear. But as a whole, for 2023, mortgage rates are still anticipated to continue to decrease. In fact, let me give you forecasts for 4 different institutions that are forecasting mortgage rates throughout this year. Take a look at the last column where it averages all 4, and you'll see that each quarter they're projecting rates to continue downward. All right, so the numbers are out for median home prices in January, and it's lower than I expected, I'll be honest. I thought it would be at least 3%, but it came in at 2.7% price appreciation. And to be honest with you, this is actually the weakest price appreciation growth that we've had in almost a decade for January, not for the whole year, but just for January. But if you'll notice something, this is not a negative number, which means that home prices in the Twin Cities are not going down. They're still going up. And January historically is the worst month for home price appreciation. As we move closer to the spring market, unless mortgage rates continue to really go and trend upward, this home price appreciation number, I predict, should be in that 3 to 4% range in the next couple of months. And just because I can, let me show you forecast for home prices from 7 different institutions. Overall, if you average all 7 of them right here in this first column, everyone is predicting a pretty flat year. But you heard it here first, I predict that in the Twin Cities, we're gonna see that 3 to 4% price appreciation. And if we don't, you can blame me. Now on to inventory, or how many homes we have for sale in the Twin Cities. In January, the numbers are out. We have 5,600 homes for sale. Look at the amount of homes we had last year for sale, 4,800. We are not much higher than we were last year, and we're exactly the same as we were in 2021. So inventory is still very, very low. And it's really important to not underestimate this low inventory problem, because housing really follows the laws of supply and demand a lot more closely than other markets, just because people need a place to live. So when we're not building fast enough, or the economy is doing well, like this January jobs report that came out, unemployment is really low, people are able to hang on to their homes, this number is gonna have a really tough time increasing. And not to mention that the millennial generation, the biggest generation, is still coming into their prime home buying and income producing years. So demand is going to remain really, really strong, at least from a demographic perspective. Now, from a purely anecdotal perspective, both Madeline and I have seen homes that have been sold in multiple offers already this year. If a home is in good condition, listed at a good price, chances are there's going to be multiple buyers who are interested in that home because our inventory is still so low. So sellers, it's still a good seller's market. Buyers, it's still a good seller's market. Yes, sorry, it's a seller's market, but it's less competitive than it has been in the past. At the end of the day, we're not seeing a housing crash. It is a bit of a correction, but it's correcting back to a normal market. Rates, although higher right now, are still going to trend downward throughout the course of this year. And with those predictions, I'll leave you with one more thought. I met a guy at an open house who said that he bought his first home in the 1980s and he bought it for $89,000. And at the time, he was so stressed because he thought that he had overpaid big time for this home. Now, that home is worth over $300,000. With mortgage rates changing, with the economy changing, all this news about home prices, at the end of the day, time in the housing market is more important than timing the housing market. Got it? All right, folks. Hope you are all having fun, and I'm gonna go play in the sun.